So let's talk about kind of like the definition. I know we kind of talked a little bit parts and pieces of the deferred sales trust, and then kind of go on kind of the mechanics of how it works, and maybe we can talk about some examples.
Absolutely. Yeah. So let's talk about how it works. Let's just do, we're going to do me and you back and forth when you're selling your $10 million deal. And let's just imagine I come to you and I'm a buyer myself. And I say, Dwaine, I want to buy your property for $10 million. Would you carry a note? Okay. And this, we're just going to explain right now the legality of this, in which, by the way, it's tied to IRC 453. So when anyone ever brings you a new tax deferral strategy, especially if it's making some big promises, you want to ask a number of questions. The first one is, what's the tax code? It's IRC 453. What's that? Well, that's just installment sale, seller carryback. You know it. Your owners, commercial real estate owners know it, and definitely their CPAs know it. And it's just we're based upon the carryback law. So let's walk through that. I said, Dwaine, I want to buy your property for $10 million. I'll give you a $2 million down payment. Would you carry a note for $8 million? As I say, you say yes. That sounds great. Now, in that scenario, Dwaine, how much actual receipt did you receive?
$2 million.
$2 million, right? Now, the other $8 million is in a deferral state, right? So you don't owe tax on that 8, but it's owed. It's just in a deferral state until and if I pay you back that $8 million. Now, what if I came to you and I said, Dwaine, I'm going to give you a 0 down payment. Let's just say hypothetically you said yes to that. And if you did, you carry a note for $10 million. But that 0 down payment, how much tax do you owe if you received a 0 down payment today?
Nothing.
Right. So you're in a deferral state on that full 10. Okay. So this is how we maintain non-actual receipt or constructive receipt. It's also, by the way, how a 1031 works. You may say, hey, Brett, I don't actually want to do a seller carryback. Just give me the full 10 million, but actually go to escrow and cooperate with the 1031. I'm going to send it to a QI company, because once the money goes into Dwayne's hands in his personal account, that's when the tax is triggered. But as long as you 1031 and you use a qualified intermediary, it's not in your hands. It's in the QI's hands, of which you can perfect an exchange, correct?
Yeah.
So that's also how a 1031 maintains non-actual or non-constructive receipt. So that's the basis of this structure. Now enter the deferred sales trust, okay? The deferred sales trust essentially is going to buy your position with a 0 down payment and ask you to carry a note for that full $10 million. Why? Because immediately there's a $10 million buyer that we already have lined up that's willing to pay cash or with a loan, and they're going to put the $10 million into the trust. So we're going to walk through this slowly. So Dwaine, the trust gave you a 0 down payment in exchange for a $10 million note. So Dwaine, how much tax do you owe today if you received 0?
0.
You got it. Now the trust bought it for $10 million, your asset, and sold it for $10 million. So if the trust bought for 10 and sold for 10, Dwaine, how much gain does the trust have?
Yeah, no gain.
0, right? Therefore, no taxes owed. Now the buyer takes title the same way he would have, no difference. He's gone, and the funds are sitting in the trust. So I'm going to pause there because I know there's going to be some more questions.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.